Good morning to all traders and welcome to this Monday's market insights video provided to you by Orbex. Stavros here. Today, I thought we will start this week actually with metals and energies. We have had a significant drop in the prices of oil once again, as of course the uncertainty around the lockdown continues. How long is it going to last? This uncertainty is affecting the stocks. We've seen on Friday actually the stocks been pushed lower. Gold on the other side had a good week overall. However, the problem is now that supply is accumulating to an alarming levels because the price war between Saudi Arabia and Russia is actually leading by the stocks now that at a level where we're not going to have any place to put the oil barrels. Now, with the coronavirus, of course, persisting, airplane travel industry is pretty much very well affected. The transport industry is very well affected. People are locked in, like 3 billion people are locked in their houses, not going out, not using cars, not using public transport. So you see the pain is likely to hit the US shale industry more than the cheap production that we are seeing compared to Russia and Saudi Arabia. So with the bills running, of course, and companies not making any profits in Canada as well, actually the situation is the same, then US shale is likely to be affected massively and much more than the others, of course. Now, Trump extended the social distancing up to the April 30th as well. So you can see that this is going to have a deteriorating effect in general. Now, I want to go ahead, of course, and start with the WTI today. Nothing changed from what we've seen last week, to be honest. I'm still seeing this as 3, 4, and 5. I'll be honest, I'm not convinced that this is wave 4 in the primary degree. So I see this just a new fresh 5, okay, with a new low. I still believe that we're going to head higher, at least in the medium term, right? To have a decent wave 4, decent correction, and then start moving lower. Now, of course, with that being said, don't forget that we mentioned that last time, wave 2 is elongated, so wave 4 can be sharp. So this might indeed be wave 4, and now we're heading lower for wave 5. Now, wave 5, as I said before, can take us down near to the 10 level, right? The truth is that anywhere between that can be considered as the fifth wave. However, because we've had wave 3 like at 138.2 extension of the first move over here, that indicates that wave 5 could actually end anywhere below the 19 level or so, but with the risk to deteriorating lower to around the 10 levels being at elevated levels. Now, let's jump quickly on natural gas, take the energies first, and then we're going to go gold and silver as well. Now, natural gas, we saw this opportunity as well last week. We talked about this being in 1, 2, 3, 4, and 5. We're still expecting wave 5 to end in the intermediate degree as well as the minor degree. The thing is that we were looking at this as an ending triangle, right? I mean, still could be the case. We've had 1, 2, 3, 4, and this is wave 5. Now, this looks like a 5 to me, right? As an A, for example, a fifth wave now. But it could be like another move to the downside, like with a fifth a duplication, pretty much another 5 with an extended 5, okay? Or we could simply see this as 5. This is 1, 2, 3, 4, and 5. So we're going to have wave A here, then B, and then wave C, where we can expect actually anywhere between that level to get wave 4 again, right? So we might not have that being wave 4. We might have that being wave 4, and then look down for wave 5. However, I see more downside in the short term, and the chances of this as well ending down here in the medium term are quite good right now. That really depends as well of how long this situation with coronavirus is going to last, right? Now, moving on to gold. Gold, as you see, I mean, I don't really change anything on my labeling, to be honest, unless if there is something that usually I don't, but if something is necessary to indicate some change from a technical perspective, right, then this is when we start seeing the patterns with a different eye. Now, for now, that being said, I'm seeing gold as an ABC, right? So I'm expecting more downside. I'm expecting more downside because the risks of a deflation are very high. Okay, so don't just think, okay, yeah, gold is the only asset that is going to go up because there is a lot of uncertainty, there's a lot of fear. But don't forget that we are actually near zero with all the banks. All interest rates are nearly zero, right? We have a lot of liquidity coming into the market. So this is increasing the risk of a deflation. Now, we've reached nearly the 78.6 Fibonacci retracement of this move to the downside, which makes this a wave A, makes this a wave B, and we're expecting wave C. Now, we've seen 1, 2, 3, 4, and 5. So this could be wave A, okay, a bit deep to be honest. Then we could see B down here. And then we could get another move to see wave C just above the previous wave A, right? That is also something that could play in. Now, if we break below that level, like the 1500s, I would suggest that this is likely to be the C wave. Okay, we're going to head lower, perhaps to the 1392, which is 100 Fibonacci, to extension to take out wave 4 and then move wave 5, or we're going to get the B, we're going to stop around the 1500s level, and then move up for wave C, and then from there we can start looking for prices to move lower. So it's the one or the other, and again it depends on how the markets are going to receive upcoming news around coronavirus. Now I want to also jump quickly on where is silver, Zach, there we go. Silver is a bit more complicated. I've actually just done this this morning, this analysis. So we've had waves. Actually, let me just go a little bit further out on the daily to have a better image over here. So I see this as a W, X, and Y pattern. Indeed, it is corrective, and indeed, it looks complex. So we've got W, X, Y, X, Z over here for W, a simple 3 for an X, which is an ABC. And then I see another triple zigzag again, W, X, Y, X, and I'm expecting Y, okay? Now, Y is expected to move lower. Oops, 1 second, something. Now, wave Y is expected to move lower. Why? Is because we've had the 2/3 of this pattern, actually let's just say 4/5 of this pattern completed, and I'm seeing this now as an ABC, right? The last correction. Since this is impulsive correction, right? We've had 1, 2, 3, 4, 5 with a leading diagonal here, and a 3 for a simple zigzag, and then 1, 2, 3, 4, and we're gonna get a 5. Now this 4, okay, could end near the 15.3 because we see 1, 2, 3, 4, and 5, which will be the A actually, then B, and then C, okay? Or it's the same scenario as with gold, right? And then start looking for the 5th, or we have just because wave 2 is a bit sharp, you know, we're gonna get something like, you know, A, B, C, D, E. We could get a triangle pattern over here, okay? Either or the B or the C wave. Actually, more likely is to be B, and then we're gonna get a C, which could be an ending triangle over here. And then we're gonna get the 5th wave. However, now the thing is that if prices move above the 16.4, then we're looking at this move to have ended down here with 3, 4, and 5 being at the 1167, and then we should be looking for prices to move up. But however, my idea here of this impulsive to the downside is that we're going to see a correction for wave 4, and then we're going to see another move to the downside to take out 5, which is also C, Z, and wave Y in the cycle degree.